Hey guys, what's up? Jonathan Rose, owner, Masters in Trading. I'm going to walk you through the Rubberband trade. Very cool trade. I'm going to show you this trade in 4 steps. The first step is going to be the idea generation. The second is going to be the idea expression. Then I'm going to show you the execution. This is a trade that I personally took. I'm going to show you exactly how I worked the order in order to get into that trade. And then finally, the exciting part, we're going to talk the payoff. Now, I am not making this to boast. I'm making this video just to show that there's different ways of approaching the markets. Many people are just using basic technical analysis. Professional traders that I know use relative value trading, trade with correlations. I'm going to walk you through the Rubberband trade. Here we go. Okay guys, so over the next couple of minutes, I'll teach you it's a simple trade I've been doing for over 20 years now. And this is the same trade I used when I was with a futures trading firm. With this single trade, we grew the entire firm from 6 people to 200 people. And in fact, it was my responsibility to teach this trade as I was the head of the training program. One point, I had taught this to over 100 traders. So we're going to do an example in the energy sector. It's a really cool trade. It's something that I personally have on now that I can walk you through each step. So right here, we're looking at CL, which is oil, against heating oil, and then against RBOB Gasoline. So these 3 products, guys, they're tied together. Like heating oil is actually derived from CL. So they're attached at the hip. So they're not going to really get that far from one another. Now, sure, because of basic supply and demand, the 3 products could separate like they did here. But over time, they're going to come back together. At least historically they have. These products are derived from one another. Heating oil is from crude oil. RBOB is from crude oil. So when we're looking for trades, we can use these 3 products. For instance, right here, we may determine that RBOB gasoline is expensive relative to heating oil. Here, oil is expensive relative to the other 2. So you can do a spread trade where you buy one and sell the other one, or maybe you just decide that you want to sell CL. The trade idea that I had, that I shared with my membership, that I still really like, it's a really good opportunity, we got a little bit of a head start, is heating oil. Notice since April 27th, heating oil has really disconnected from oil and from gasoline. So when they disconnect, just like a rubber band, we expect them to snap back in place. So the trades that we could do is, again, we could sell and we can buy. Or we can just buy. Look to buy heating oil. And that's what I wanted to do. That was the first step. So 1, our idea generation. The idea, we want to get long heating oil. Heating oil is inexpensive relative to gasoline, relative to crude. There's many ways we can express that opinion. Part 2, I'll show you how I express the opinion. So the second step is idea expression. We know now that heating oil is inexpensive. So in my mind, that's a done deal. I've proven that. Now I want to find the best way to invest in a cheap heating oil, right? I could buy futures, I can do options. What I decided to do is I found a stock, PBF, and I found that by looking for heating oil ETFs. And then once I found heating oil ETFs, I then went to use a correlation tool If you're interested in the correlation tool, leave a comment below and just ask. I'd be happy to help you. Because what I was looking for is I wanted to find companies that were tightly correlated to the price of heating oil, that were dependent on the price of heating oil. Then I analyzed those different companies. PBF was the one that I found to be, and I should probably write this in purple. PBF is the one I found to be cheapest relative to heating oil. Because I know that heating oil is inexpensive relative to CL, right? That oil, relative to RBOB gasoline. And so what I wanted to do is, wow, I wonder if I could find something that's also correlated to heating oil, but it's inexpensive relative to heating oil. That's why I came up with PBF. Let's go over to the options chain. I'll show you exactly how I executed the trade. Again, not boasting here. I'm hoping you learned something. These are tools that we use to simplify trading. My mission is to open up people that you don't have to just be dependent on charts. There's many ways to play this game. And for me, this is a lot more scalable. It just makes a lot more sense for the way that I think. Okay, so let's talk idea execution time, right? We first had the idea generation. What did we want to do? How do we want to express it? We decided that the best way to express getting long heating oil for what we were looking to do is PBF. So for PBF, here's how I personally traded it. The first trade was done May 28th. May 28th is going to be, right around this time period. I got in there, I bought a 10 lot. A couple of days later, didn't move yet, but what I want you to notice is these still rallied. So as much as this kind of broke right here, these were rallying, so it gave me confidence in adding to the position. And I was adding to the position because it was getting better. All of a sudden, I loved something, and then it went on sale. Yeah, I'm going to buy some more. Sign me up. So now we're long 20 option contracts. When you're long 20 option contracts, think of that as being long 2,000 shares. It's really the same thing. I'm long on the 12 strike. So as the market rallied, and we rallied up here, well, I'm going to take profit. I'm always going to take a little something off the table. We call that getting on prints. I tell my guys all the time, guys, get on prints, get on prints. So getting on prints is, let's sell, but don't sell everything. And the reason we don't sell everything is because we really still like the position. We still really like the idea of staying long heating oil, especially because the reason we got into the trade, the strength of oil and the strength of RBOB gasoline, was still going higher. So we were okay with that. So again, bought a 10 lot, bought another 10 lot, sold a 10 lot, locked in $3, took that off the table. So right away on the trade, I'm up 3K, and I'm still long a 10 lot. So you can look at it as just cross off these middle two trades. They're done. Clean it up a little bit. So they're done, right? So then what I do is when it comes back down here, remember, I have an opinion. So when it comes down here, I'm in. Sign me up. Let's get right back in there. And that's when June 11th, I put in an order. I got filled. But what I also want you to understand, the importance of how you work your order. So when I did that last order, June 11th, I actually ran the recorder on my screen. And I sped it up, I think 2 times or 3 times. But what I do is I'm a $1.30 bid. So it's $1.30 at 145. So it usually takes me time to get filled. Never, ever, ever do you lift offers. $1.30 bid, and then I just sit. I already have a position, I'm bid to buy, and then I just wait to get filled. I'm not in any rush. I do whatever it is I do throughout the day. I'll leave that order in until I'm ready to take it out, even if it's more than a day. I end up working many orders in the market, but again, work limit orders. Nobody should be using market orders when it comes to options, especially when it comes to spread trading. I'll just assume that you're not using market orders when it comes to doing a vertical spread. Use limit orders. I'm $1.30 bid, and I just sit and I just wait and I leave it in the market. And there we go. We just got filled, but it takes a while. It's okay to leave your orders in the market. Now, the final one, idea payoff. How did we end up doing in this trade? Well, we still have time to go. But so far, so good. Right now, we're up about $5,000. We've zero risk. We've already locked in that profit. PBF, I think, will continue going higher. I'm a buyer of PBF on any pullbacks. And then I'm just going to patiently sit with my trade until these darn things expire. Hopefully, we get a big runner, can make a whole bunch of money. If it pulls back, again, I'm a buyer. Let's turn this $5,000 into 25. Hope you enjoyed that. If you have any questions, please leave them in the comments below. If you could subscribe to the channel, I'd really appreciate it. It helps huge with YouTube, and I promise to bring you as much value as possible. Thanks, guys. Jonathan Rose, owner, Masters in Trading.